So let's get started. Once again, welcome everybody to this final session of the group engagement. Thank you for joining us today. My name is Karen Klomp. I am the Wave 2.2 mobilization lead at the delivery partner. And on the call today, we are joined by other members of the delivery partner team. Our speakers today are Rachel Wright, who is the evidence checks manager, and Alistair Irwin, who is the finance lead. And this is the final session in a series of Wave 2.2 grant recipient group engagement sessions. And we've put these sessions on to provide you with information to support you to deliver your SHDF Wave 2.2 project. Today, we will be discussing reconciliation, evidence checks and return of grant funding. And this session is aimed to provide you with a high level of overview of these processes. The format of today, as previously, will have a 30-minute presentation followed by a question panel that will be related to today's content. And the question panel will also be around 30 minutes time. The session is being recorded and we will make both the recording and the slides available to you after this session by close of play tomorrow. If you have any questions during the presentation, please pop them into the chat, and during the Q&A panel, we will get to your questions. And as a reminder, if you have any project-specific questions about your own specific project, please direct those to your SPOC once they reach out to you to start your engagement with them. Your cameras and mics have been disabled and they will be re-enabled once the question panel begins. And I will now hand over to Rachel Wright and Alistair Irwin to start the session.
Hi everyone, and thank you for joining us today. So the agenda here, we're going to cover off some of the key finance processes on the scheme, and hopefully that will be a good introduction to them for you. We will be sharing some more detailed guidance and templates as we get closer to the deadlines, which will have more details. But hopefully we'll cover off all of the key messages and in terms of how the process works today. So this slide just starts us off with a bit of an overview in terms of how the finance processes on the scheme all fit together. So probably the first bit to point out in the top box is around the monthly reporting. So the grant recipients each month are required to submit your actual spend figures and forecasts split out by each month through to the end of the project. So that template is due every month on the 10th working day and is submitted onto the DMS upload portal managed and run by the department. Then, as a sort of separate process from that, you request your drawdowns to actually be paid the cash. So those will provide a template, if you don't already have it, for a drawdown request form. And those are submitted by email directly to the department's finance team to process those payments. And we'll touch on the payment process more a bit later, but those are submitted 2 months in advance. So for example, a drawdown request submitted in April would then be paid 2 months later in June. The second part of the process we're going to cover today is that 3 times a year there is a reconciliation statement, which is due, and that acts as a sort of checkpoint for us to see that your spend is in line with your target. And then that leads us on to the third box, which is around the evidence check process, which is where we would select an actual sample of documentation to review that the spend is in line with the scheme criteria. So the reconciliation and the evidence check process are run by us as the delivery partner, and then the drawdown process or drawdown requests are submitted directly to the department for their team to process. So if we go on to the next slide, please. And then just on to the next one. So this is going to be a bit of a deeper dive into the reconciliation process. So to support the reconciliation, you're going to get a template with all of the required information. And we'll share that in due course, and we'll have some more details on the timeline shortly. Overall, it's a relatively simple template which asks for a list of all of the transactions that you have incurred and all of the spend that you have incurred over the reconciliation period. So this will include the details of your consortium partners' spend, as in the detail of what they would actually have been paying to their suppliers as well, down to the, and then that will be summarized up to show the total that you have spent on capital versus A&A, and then a breakdown of how the co-funding and the grant funding spend is split out. Probably a key point to emphasize around the transaction listing is that it should match the figures that are included in the monthly reporting onto the DMS portal. We'll get onto it in a second, in another minute, but the requirements or the definition and requirements of what is spend is exactly the same across all of the different reports. So we would be looking to see that all of the figures are exactly the same across them all. If we go on to the next slide, please. So this is an overview of the actual reconciliation periods. So they happen every 4 months. So there will be 3 that are relevant to the people on the call today. The first one will cover the period from the 1st of April through to the end of July. And then the deadline for submission shown there will be 10 days after the end of the relevant reconciliation period. So you'll get a copy of these slides that will have the dates on them. And if we go on to the next slide, then it gives a bit more detail in terms of the timeline that we're following. So as I said, after the end of the reconciliation period, then on the 10th working day is when the reconciliation statement is due to be submitted to the delivery partner. We'll circulate more details and a guidance note on a template, as I said, and that will include the email address where that gets submitted to. After that is submitted, then we and the delivery partner have 5 days to review that and check it all adds up and looks right internally. And then we'll select a sample of expenditure of the transactions where we want to see the supporting documentation. We'll return that back to you in a reply to that email from the same mailbox, and then would ask you to return that evidence within 5 days for us to review, and then we'll report any findings from that to the delivery agent in Salix and Desnes to review any actions that are needed as a result of the reconciliation process. And it's probably worth noting as well that the reconciliation process is also intended as a checkpoint to see that what you're drawing down is in line with what you're actually spending, and so that if there's any kind of variation or balance building up or a surplus or a deficit, then it's looking to see that you're sort of taking the appropriate action to balance that out. But we'll touch on that in a minute as well. And then just a reminder on the key point that we'll probably keep talking about is just in terms of making sure that the reconciliation template and the transactions listed there should match the reporting that's included in the monthly upload template. So if we go on to the next slide, please. So this is just a bit more detail on the drawdown process. So as I said at the start, the drawdown requests are submitted directly from grant recipients to the department 2 months in advance of when they will be used. So as I said, something submitted in April would then be paid and relate to what would be spent in June. The reasons for that is because of all of the department timelines to get all of the money together and work through the finance processes needed to get out to grant recipients on time. The kind of key principle around preparing the drawdown forecast, the drawdown requests, is that they should be constantly adjusted every month where you're submitting them to account for any surplus or deficit that you're already holding. So for example, if you've been drawing down a slightly higher amount and then spending less, and then you've built up a cash balance, then the next drawdown request that you submit should be reduced with the aim of trying to work towards as small a balance as possible at the end of every after you receive each drawdown. And just to say, we acknowledge that that delivering these projects is very complex, and there's always going to be variation, and probably what you're planning in April or any other month, 2 months later, there's always going to be changes, and we completely understand that. But it's just asking you to be constantly conscious of that and working towards reducing the balance as much as possible. And then to support that, we'd be asking grant recipients just to review the forecasts through to the end of the project every month to make them as accurate as possible, so that we can get a bit of a sense in terms of where you're likely to end up and to help support that process. And then that's a bit of an overview of the reconciliation and the drawdown process. And now I'm going to hand over to Rachel just to talk through the definition of spend.
Thank you, Alistair. Nice to be speaking with you all today. Thank you for taking the time to join this call. We'll go over a quick overview of the definition of spend incurred and then discuss the evidence review in a bit more detail. Appreciate that this is going to be a bit of a high level, so as not to overload you with too much information. There will be some additional guidance notes shared with you that go into a bit more detail and provide some extra examples for you. So definition of spend incurred, as Alistair's already mentioned, when you submit your monthly templates and your reconciliation templates, these should align to each other. The figures should total to the same balance. And that means the definition of spending incurred is consistent across these. When we talk about spend incurred, we don't necessarily mean just the cash that you've paid to your suppliers and when those payments are actually made and when you've received those invoices. We do appreciate that these are going to be large projects and large contracts signed with your suppliers, and they'll likely be delivering a large bulk of work in one go before they then invoice you for their services. So it's expected that when you submit your monthly templates and your reconciliation templates, you'll be reporting spend in line with the progress of the project. If we slip onto the next slide, we've got a bit of an example we can walk through together. And as I said, the additional guidance will go into some more detail. But what that means is if we look at one reconciliation period, so we've taken December 2023 to March 2024 for some of the Wave 2.1 applicants that they're going through right now. If they'd had a contract with their supplier to deliver external wall installations, and as at the end of March, they were only 50% of the way through this work, when they submit then their reconciliation template, we'd expect them to be claiming for that 50% already, because that 50% of the works has already been delivered. They would need to wait for the full 100% to be delivered and for the invoice to be received from the supplier. Based on this guidance, then we have a few examples of what wouldn't meet the definition of spend incurred. So, for example, if purchase orders have been raised but no works have started under those, we wouldn't expect you to include these within your monthly reports or your reconciliation templates. Same again for a contract signed in the reconciliation period, but no works have started under that contract, or a full value or quote from suppliers, in particular if they've billed in advance but not actually delivered any work yet. Reporting should be in line with the progress of the works being completed by your suppliers. As we said, there'll be additional guidance that goes out with more examples, and please feel free to reach out as well if you have any further questions on that. But moving over to evidence checks as well, if we go to the next slide as well, please. Again, this is the high-level overview of the evidence check requirements. The purpose of these is to check that expenditure that you're claiming for in your reconciliation templates meets eligibility criteria, that it's supported by appropriate evidence, and that it's been appropriately categorised. High-level overview here, but again, the guidance notes that will go out will have more details on this. So you'll be recording your spend incurred against the programme. As Alistair already mentioned, your reconciliation templates will have a separate tab for you to submit your full transaction listing within there. 5 days after you submit the template, we'll review and we'll select samples, and we'll share these samples with you for you to submit the supporting evidence. It is done on a sample basis. However, the DA and DESNES at their discretion could ask us to complete a full evidence check review against your whole transaction listing. So just be aware of that as well. And please make sure that you retain evidence for all of the items within your transaction listing. If we go to the next slide, please. So here we've got an overview of some of the expectations and some of the requirements and some of the lessons learned from the Wave 2.1 grant recipients. So as already mentioned, we'll select samples from the transaction listing. And as Alice has already alluded to, if you have consortia members, you just submit one listing that should cover all of your spend as well as their spend, and we'd select samples from there. Hopefully in line with your own internal audit requirements as well as external audit requirements, you should be able to support every transaction, preferably with third-party support. And that means that throughout the course of the project, you'll need to retain all supporting evidence to support your transactions. This should be from a third-party source, such as invoices, purchase orders, contracts, etc. And our guidance will go into some more detail on that. That also includes then any internal costs you can look to claim for under the funding. We have some additional guidance on that we'll share with you separately. Some of the lessons learned that we have from Wave 2.1 and something that might require you to go out to speak to your suppliers is just making sure that any evidence that you submit provides a detailed breakdown of the works completed. Any generic statements on invoices, such as Wave 2.2 works completed, it doesn't go into sufficient detail to confirm the exact nature of the costs that suppliers have incurred. So please reach out to your suppliers, make sure that you're getting a detailed breakdown of the works that they have completed, and this will also help you make sure that your spend is accurately categorized. There should be a clear link between your transaction listing and then the support that you've submitted, transaction descriptions, IDs, dates, etc. If when you submit the evidence, the link between our sample and the evidence is not overtly clear, please do just provide some extra details there as well. You should also be comfortable that the support that you've received from your suppliers agrees through to the cost that you're claiming. So please do take some time to check that as well. And you could also be asked to evidence how a particular claim relates to a particular property. So again, please do keep records, contracts with suppliers and properties that they've worked in as well. All right. Just one final point from me. Again, it's in our guidance note, not quite on their screen there, but when you put together your transaction listing, appreciate that your suppliers might be billing for a large volume of work in one. However, please make sure that you split items out at a granular level to make sure the categorization is correct. We appreciate suppliers might bill for some A&A costs and capital costs in one invoice, but if you're able to break this out with a breakdown of the costs, that'd be much appreciated. And again, high-level overview of the process. So once we complete our checks, if we identify any issues, these will be reported back to the DA and DESNES for further investigation. Otherwise, if we're satisfied that the support you've submitted aligns to the transaction listing and sample selected, we'll complete our review. Cool. And I believe, Alistair, I'm handing back over to you.
Yes, thank you. So our final section is around return of grant funding. So I appreciate it's probably a bit unusual to be talking about returning the grant funding whenever you haven't really started yet. But we just wanted to run through the process and some of the situations in which it might be relevant. So as our overall aim is that we won't need to claw back funding or reduce any scenarios where that's needed. And as I mentioned earlier around, adjusting the drawdowns and keeping conscious of the forecasts and trying to reduce that balance is obviously helpful in working towards not needing to return grant funding. So if we go on to the next slide, it goes through some of the scenarios where it might be needed. So there'd potentially a clawback needed if a grant recipient had any unspent funding after the end of the final reconciliation period. It could also apply if through the change request process, if the scope of the project significantly changes, or if a project was to withdraw. So for example, if you'd drawn down on the basis of a significantly bigger project, and then that wasn't going to be possible, then a clawback would probably be needed in that situation. Or the third scenario there would be around maintaining the agreed level of co-funding or grant intensity. So all of the grant offer letters will include the proportion of funding that's expected to come from co-funding. And then if that percentage wasn't met, then DESNZ would have the right to request the grant funding is returned. And then our next slide just gives a bit of an overview of the process. Now, if a grant funding or if a repayment was to be needed, then we'd obviously explain the process to you in a bit more detail at those situations. But at a high level, the process is that we as the delivery partner would notify the grant recipient through a letter that a return of grant funding is needed. Would then ask the grant recipient or yourselves to confirm receipt of that letter and sort of acceptance of the figure in there. And then the request would be to return the funding that would go directly to the department within 30 days of receiving that letter. It's a fairly straightforward process there. I think that brings us to the end then of the sort of formal presentation, and we're handing back to Karen to welcome any questions.
Thank you very much for that presentation, Rachel and Alistair. That was really useful. They're so useful that there aren't even any questions in the chat. We will now be joined also on the panel by Russell Irwin, who is the Support and Remediation Lead within Delivery Partner. Just a reminder, if you do have any questions, please relate them to today's content and contact your SPOC for any specific questions. Either put your hand up or put a question in the chat, and I'll make sure that we'll get to you. If you have any feedback on the content of the session, please get in touch with us via the question form, which was in the communications for this event, which was shared by Salix. And before we get to any questions at the end of the Q&A, we will share a quick poll question in the chat, and it would be really appreciated if you could fill that out. It's only one question. Rafe, you put your hand up, so we'll go to you.
Hi there. I've got sorry, excuse me. I've got two questions. The first one is, could you tell us a little bit about how this process engages with the co-funding approach? Because the contractor will, with 50% or more co-funding we have, the contractor will be invoicing for the money that they've spent, and that money is a combination of grant funded money and co-funding from ourselves or from other sources. How does that work with the what we're claiming for and the sort of reconciliation process, please? And then I'll come back and ask another question, if that's all right, or put me to the back of the queue or whatever.
Alistair or Rachel, may I hand over to you? Thank you.
We can start. So yeah, whenever we send the template for the transaction listing, there'll be a column for, say the total invoice was £1,000, there will be a column to put in that £1,000 figure, and then there's a second column which would be the amount that you're actually claiming from the grant. So you could put into that column sort of £500 or whatever the figure would be, and then we'll sort of be aware of that. Does that answer the question, or is there anything else?
Yeah, I think that it'd be good to see that template, but I think that makes a lot of sense. Yeah, no, that's good. That's clear. My second question, which I mentioned yesterday, and I got a very nice email from inquiries at Salix, etc., about this exact thing after having sent all of our grant offer letters back. And I'd love to know, I hope it's not such a general issue, I'd love to know how everybody else on the call is managing this issue as well. And that's to do with the, I think it's called the reasonable certificate or something like that. This is the kind of independent accountancy and it's interesting that Rachel from PwC is here, because maybe she could give me a quote for this work that we're meant to be paying for ourselves. But I just don't know. It wasn't in the GFA that we had originally. It's a kind of feels like a new thing. Maybe I've missed it. I don't know how this works, and I don't think we've covered it. But I'm being hassled, not hassled, but sort of politely requested to actually return the forms, signed, when I don't know whether this is a sort of £100 activity or £100,000 activity, which makes it difficult for me to kind of go into too much commitment about this.
Yeah, so I'll try and pick that one up. So I think it's, if I remember right, Schedule 1 and Schedule 2 of the grant offer letter set out this. I think Schedule 1 is a sort of template report, and then Schedule 2 will be a sort of template letter of engagement with the accountant. So I suppose the requirement is to engage with an external accountant and sort of work through a procurement process, however that works in your organisation, to get a quote for that. We don't really have a sort of a guide value on what that is. It could vary so much depending on, I suppose, the value of the grant and the complexity of what they have to do. So if the evidence is all sort of neatly arranged and readily accessible to the accountant, then it's going to be a bit of a quicker process for them. But I don't think if there's anything we can do to help or clarify around the process, I'd be happy to pick that up. I think it's largely just down to sort of working through the procurement process in your organisation.
Well, I suppose, Alistair, what my ask is advice of what we say to Salex or the department when they're asking us to fill it in. And I mean, and within a kind of tight timescale, which wouldn't include any time for a procurement exercise. So what I'd love is that if you could go back to Salex and the department to release us from filling all of this in, because until a certain point whereby we have got a bit up to speed in how much this costs, who we're going to go with, and what the scope is.
Can take that away. It's probably above us on the call, I suppose, to be able to talk about that. It's a requirement, I think, in all of the GFAs, and they've set it out in terms of, I know there's sort of broader requirements on the department around doing this. So I would say it's probably maybe not in their control, but we can certainly take that action away specifically to discuss with you.
Thank you so much. Thank you.
Thanks, Rafe, and thanks, Alistair, for answering that. Then we'll get to Wendy Malone. After that, we'll get to Nicola Turner, and then I saw a question in the chat as well that I will get to. So, Wendy.
Thanks, Karen. An easy one, I hope. We're coming into the third week of April, and we want to get cracking. I just wondered what the timescales were for allocating of the SPOC.
Russell, may I hand over to you for that one? Yes.
Yeah, so we've waited for the GFA pack process to complete, and we're looking to send out information today, which will link up the SPOC coordinators and your SPOC allocations.
Brilliant, thank you.
Thanks, Wendy. Thanks, Russell. Nicola Turner.
Good afternoon. My question was just really around the templates and just clarification. How quickly are we going to get the templates, and also are we going to have confirmation of what needs to be returned to who? Because it feels a bit complicated with some going to the SPOC, some going to DESNA. I think there's real potential for things to be sent to the wrong organisation. So there was just that. And in relation to Ray's question earlier, we've returned the paperwork on the basis that we're going to use our internal auditors to do the audit because they're an external company who are appointed. So if that's not correct, can someone please tell me ASAP, because we have not made any assumptions that we're going to have to tender this piece of work. Thank you.
Who on the panel wants to take this?
I can start off on that. Yeah, in terms of the guidance and template that we're going to issue, yes, they'll include all of the the different, it'll set out which email address to send it to. We appreciate there's a few different sources to go to. I'm not sure on the exact date in which we'll send that out. We just need to double check if there's any changes needed in Wave 2.2, but it'll be well in advance of needing to submit anything. We'll keep you updated and keep you updated through your SPOCs as well. And on the point around the internal auditor performing the work, might need to just take that away specifically. I'm not sure on that. I know it seems to be an independent. I suppose they need to just kind of assure themselves. You need to assure yourselves that it's sufficiently independent.
They are independent of us. There's none of our staff are on the audit team. They are externally procured. We just call them internal audit, if you know what I mean, because they do that function.
Yeah, I don't know, Rachel, if you have any thoughts on that, but it sounds like.
No, I think it's a good question. Thank you for raising that, and one that we can take away, and one that perhaps could be raised to the department as well. As Alistair said, if I think it's getting comfortable that they're sufficiently independent.
Thank you very much. And as Alistair alluded to, that guidance that has been mentioned by Rachel and Alistair will be sent out to you in due course, well in advance of the first reporting cycle. Your SPOC will be able to tell you more about that again in due course. Mark Winstanley had a question on the chat. What evidence do you need for staff time spent on the project?
Yeah, good question. So again, that guidance will go into further detail. Just as the general overview, we'd be looking for timesheets, and we'd also be looking for sign-off from heads of department or HR departments to confirm that the time recorded is complete and accurate, as well as the costs associated with that.
Okay, I hope that answers the question, Mark. Nicola.
Sorry, can I just come back on that timesheets? We don't use timesheets, so are we now required to have staff recording the time they're spending on the project and submit them?
Yes, it's what we have seen so far. Organisations having to implement some kind of timesheet process or trackers for time. We do appreciate that some staff might be splitting their time across projects, so you should only be claiming for the time associated that's actually spent on Wave 2.2. When we send the guidance over, perhaps one that you might need to discuss internally on how best to represent that. And any issues, please reach out as well, and we can discuss some alternative support as well, if that's helpful.
And it's very good that I'm at this session, because we wouldn't have been doing that if we weren't at this session, because that's an expectation which is very, very new. Okay, thank you.
Thank you very much for that. Are there any further questions? Please do raise your hands. If not, I'm just going to use the chairwoman's prerogative to ask a few things. So what if the grant recipient hasn't been invoiced by the supplier yet? So how is evidence spend? How is the spend being evidenced if you haven't been invoiced yet?
Yeah, another really good question. So we do expect there'll be a range of support that you could potentially submit to support this. Statements of work, for example, from your suppliers confirming works completed each month are very helpful. We understand they could be quite big, unruly spreadsheets. So some emails as well from your suppliers confirming works completed to date. These can also be backed up by purchase orders, not on their own, but in conjunction with the statements of work. Contracts with suppliers that outline schedules, etc. So yes, a variety of support that you could submit. The guidance will have further details, and if in doubt, please do reach out to your SPOC on this as well.
Thanks very much for that, Rachel. Angela Morgan. Just getting you unmuted. Are you there, Angela?
I am here.
Yes,
it's taken a while, sorry.
Yeah, no worries.
Rachel, sorry, do you mind me just asking on the point you just made about you know, an email each month backed up in conjunction with purchase orders. With how our accountancy is here, we intend to raise purchase orders in full at the start of the year to commit the money internally. So is it acceptable that that purchase order will be a lot larger than what? Just wanted to check you aren't expecting the purchase order to match the amount that the email is confirming has been completed.
Yeah, no, that makes sense. We'd expect that your purchase orders are going to be larger. As the works are then completed, it's the chunks that are then completed that you then add into your monthly reports and rate templates. Yeah.
Thank you. Thank you.
Thanks for that, Angela. No doubt that will have helped others as well. Any further questions? No, I'm just. Oh, Adam Butcher. You're still on mute, Adam.
Hello, sorry about that. It was just going back to the reasonable assurance report. I'm on this meeting, but I haven't really got a financial background. Would you be able to just explain what it is and when it needs to be done, and like does it apply to local authorities as well?
Thanks, Adam.
Yeah, so the purpose of it is to give some additional assurance to the department to confirm that the money has been spent sort of in line with the scheme rules and accounted for correctly. So it's getting sort of an external accountant to come in and look at, you know, what you've reported as spend, doing, you know, looking at the details behind that, and then essentially producing a report that would be directed towards the department to confirm that they're happy with everything. So the schedules that I mentioned in the contract are, one of them is to support you in getting that together. It's a sort of template letter of engagement, which you could use, basically essentially use that as your contract with or letter of engagement with the accountant. And then one of them is the template report. So it sets out pretty clearly, hopefully, in terms of what the department are looking the accountant to confirm. It's due annually, and I think it's 6 months after the end of your financial year end.
Right. Okay. So that whole thing didn't necessarily need to be completed in line, because I got a response regarding the GOL, which was luckily the only thing I had to do was input a date that I forgot to input. But then, so the next time it's required, we'll be given notice.
Yeah, the actual template and schedule is 1 and 2, I think it is. Needs to be completed by the accountant after the spend has actually happened. It doesn't need to be filled in to return the letter now.
Right. Okay.
And then just on Raif's question around, is it a new thing? It's not. It's also a requirement on the Wave 2.1 projects as well, just exactly the same. And in terms of whether sort of accountants out there will know what to do, we believe, yes, it's a fairly standard sort of assurance engagement, and they will have the relevant standards to carry out this work. I think it's a common thing that I've seen across sort of grant funded projects, so I think they'll be well aware of the requirements and standards around it.
Thanks, Alistair, and thank you, Adam and Raif. Angela.
Feel like we're all really going to just hone in on the reasonable assurance report now. So forgive us, it's come up. Much like our friend there that just mentioned, we've also had it returned to us to say that section hasn't been completed, and us with our accountants are of the thinking that we couldn't complete it yet because we haven't got anything to return, and we haven't we haven't done any, we haven't got any grant funding at the moment, we haven't got anything to draw down. So and our legal and accountancy side have also come back, we haven't had anything yet, we haven't got anything to spend, so we don't know how these pages can be completed yet. So Alistair, what you've just explained you know, it's required annually and 6 months after your close of financial year. But what do we do now then with the bit where we're like, we've still got to send it back, but we haven't got anything to say? Do we? I mean, you know, we submitted it nil, obviously. We've submitted it as part of the overall package, but yeah, it's come back as something that we now need to submit. And unfortunately, I don't think we're all sitting here independently going, but we can't do anything yet. So what's your advice on us? I say, sorry for the gentleman that was on before. He's obviously asked sort of same similar thing. What's your advice on us, Adam? Beg your pardon.
Take that action away, maybe just to check what's going on there. I'm not sure about that specific situation. Okay. But yeah, I agree with you. It's, you know, you can't assure spend that hasn't happened yet. I'm not sure where that sort of confusion's coming up.
Even if it's writing something in it that says, we acknowledge this cannot yet be completed because there is, you know, someone else might be looking at it. No one can draw down on anything at the moment, but maybe a separate person is looking at those sections. They're not looking at other sections of what was submitted. So maybe it's to support the people that are, you know, not everyone's maybe looking at the same sections. But yeah, if you wouldn't mind, because at the minute none of us know what to put back.
Can I just check, Angela, are you getting and Rafe as well, are you getting responses back that you also need the report or the template report, Schedule 1 filled out, or is it only Schedule 2, the letter of engagement, that you're being asked for?
To be honest, it's just page, they've listed it as the page. So yeah, okay. Page 13 to 14 for the grant recipient to populate.
Okay. We'll take that back. Thank you.
Thank you.
Same, exactly the same here.
Yeah. Thanks, Rafe. Thanks, Angela and Adam. And Katie was also asked for the same. Thanks for that contribution, Katie. We'll get into this Schedule 1, Schedule 2 about the independent accountant and come back to you. Are there any further questions on this topic? On the wider topic of reconciliation evidence checks? No. I'm just going to ask one more, if I may. So, but the grant recipients are already submitting monthly reports. So why is there a need to also submit reconciliation templates? Sounds a bit double up.
Yeah, so the monthly reports are just a high level figure of what has been spent within that month. And in the reconciliation statement includes more detail of the transaction listing, showing us what actually makes up those figures. But obviously didn't want the burden of having to produce a transaction listing every month. And also the reason for having it every 4 months is to act as a sort of checkpoint where we'll look and have an assessment of, have you drawn down too much or too little in comparison to what you're spending, as a sort of checkpoint rather than doing that every month as well.
Thank you very much for that clarification, Alistair.